Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, now Captain Finance himself, Sully.
Wherever you're watching, wherever you're listening, we welcome you to another edition of the Big Biz Show. We're live inside the Loft 100 studios here in beautiful Southern California. And around this parts, we just like to say,
a big old howdy to ya.
Yeah, that's the day trader Quattro, or the Four, as they're more commonly known. Back here at the bar, it's Costa, Mary, Godwin, and Sully. Quartet. Okay, the Q.
Isn't that what we said?
The Q.
I believe that's what we said.
I think we'll do that.
Okay, oh, here it is. That's because I'm not wearing a mic. You guys are hearing me. You guys are hearing me through Mike's mic.
Perfect. Just shout a little louder here. I'll just sit here. I'll attach myself to your neck.
I've done this before where have you ever seen me like lean up next to Mike? It's because I'm not wearing a microphone.
Okay, you and I both came from terrestrial radio for eons and eons, whatever the frame is.
You show up in a pair of board shorts and a burrito and a newspaper, and you have to look up?
Yeah.
Do you remember that?
Just do the show?
This is what they call behind the scenes. We're going to get huge ratings from this.
Little bit.
They'll watch this section here more than the entire show.
But board ops who run the board for radio shows always think they're doing you a favor by turning on your microphone. And it used to I will turn it on when I'm ready to talk.
You say that daily.
We have the same argument back there.
Yeah?
It's just,
I got it.
All right,
my first rodeo.
How are you doing this holiday season? We had our company Christmas party, and I had my Christmas party at home. I kind of feel like Christmas is over. But it's like all planned. Now it's easy.
Yeah, I'm getting ready for Valentine's Day. I don't know about you guys.
Are you really? I'm all wrapped and ready to go. What about you?
Was that injury on your cheek? Was that from the party?
I remember walking into the house, and then I remember waking up on the ride home going, wow, where the hell did I get this thing from?
That's good.
It was awesome.
Lots of stuff happening in the stock market, especially when we have end-of-year repositioning for portfolios, but there's also this thing called a Santa Claus Rally. Here to talk about that, our analyst, Howie Font, in negative 0 degree weather.
Our little elf.
What's up, Howard?
Hello. How are you guys?
Okay.
What's the weather like there? Honestly, is it in the zeros?
Now I'm being a little dramatic. It's 30, but it was 18 last night as I was sleeping, so I wasn't thrilled.
God, I got down to 68 last night here.
Yeah, I had to wear a sweatshirt out the other night.
I know. Whoa. It was almost. It's been beautiful during the day here, like
gorgeous.
Typical 70. Beautiful. But I mean, when it does dip below 65.
By the way, thanks for having me on. I appreciate it. I'm freezing to death slowly, but that's
Well, all the airports were shut down on the East Coast. Hey, Howie, is the repositioning done in portfolios for the end of the year, and we get to start seeing the Santa Claus Rally pretty soon? Because it's been a lot more volatility than we anticipated. We got that interest rate cut, and I thought we'd start rallying a little bit, but nothing's kind of gone sideways.
Yeah, I think the thing that was interesting about the rate cut is while it was largely expected, we didn't know what was going to happen as far as tilting at who the next Fed chair is going to be. So we're not going to have to hear Jerome Powell's name anymore as
Jerome Powell.
I think with the tax loss harvesting and all that selling, that happened like late November, a little earlier than normal. Mm-hmm. And so we have seen a good bit of buying. We've been flat the last couple of days just because there's some employment data that came out. But we thought maybe 7,000, like we've been saying on the show for a couple of days, and we're only 200 points.
Yeah, that's true. I always see December as always being a really solid month. October being a horrible month, and September kind of iffy, but December is always good. We talked about Ethereum, and we talked about how digital currency is making its way into the investment world. How maybe Bitcoin is like investing in a stock index, but Ethereum actually could be currency at some point. And JPMorgan's taken a pretty big step. First major bank to actually maybe sort of recognize it, right?
Yeah, so they're using Ethereum's technology. They're not investing in the coin itself or anything. They're using smart contracts to create a blockchain money market fund on the Ethereum platform, and they've seeded it with $100 million. So it's actually the first product of its kind that's open to investors. It's kind of going to be the new standard if you believe the blockchain hype that this is what has to happen for cryptocurrency to grow. And basically, if you're a layman, you sometimes think, well, I can send an email, that instantly goes through. I can send a text, that instantly goes through. How come if I do a money movement, it takes
4 days?
Couple days?
Yeah,
I mean,
that's the float, Howie. That's the float that
somebody's
banks are
gonna
living
steal
on.
it.
There's this thing in Wall Street, and Howie and I talk about this quite a bit, called high frequency trading, where the trades are made based upon 30-second moving averages and 2-minute moving averages versus 200-day and 50-day. And the trades are so micro; they're making micro pennies, but they're doing it so much that they're maximizing and trimming their sales at a very rapid rate. Same thing happens in the banking communities when you recognize when you buy something that dings your credit card right away, but it takes 5 days to get credited back. That's the float.
Yeah.
Same thing happens with when you used to deposit your paycheck and they wouldn't give it credit for a couple days. They're making money on all that money. Yeah. And it's a strategy. Now, it's gotten a lot better than it was before, but still, it is a strategy, which is sort of ridiculous because the technology is there to give you instant credit.
No, that's right. And we've talked a lot about when there was the transition from T+3 to T+2 trading. So, you buy Apple stock on day one. It doesn't actually arrive in your account until T+2 now. I think, Sully, you've talked about T+7 or...
Well, yeah, back in the day, we had T+4. So in other words, T means transaction. So the date of the transaction, let's say Monday, you sell your share of Apple stock. You used to have to wait Tuesday, Wednesday, Thursday before you get your money. Now it's T+1. And I don't know why it was T+4 or T+3 before. I think it just gave the opportunity for the brokers because it's not a bank, it's a stockbroker.
But when you sell, you sell on a Monday, are you still getting that figure that you sold it for on Monday?
Yes,
or does it change?
No, you're getting a figure.
Okay.
You lock in the price, but you don't actually settle up for a couple days.
But but what you asked is a great question because I was watching that movie last night, in the 10 minutes I can watch TV before I fall asleep, about the credit default swaps with Ryan Gosling and Steve Carell. Talked about the mortgage crisis and stuff like that. And it was a great lesson on shorting stocks because in your case, Mike, what you just asked was, do you get the same price? Not if you short a stock. You have to settle up in a couple days whatever the share's at. And hopefully it went down because you can keep the difference. But long story short, does this really change anything for the consumers, or is this more higher level investment banking?
Yeah, no. I don't think right now it's only available to private bank clients, so it's not going to affect you and me. Well, it might affect you, but it's not going to affect consumers day to day yet. But if it's happening for them, once it gets rolled out and scaled, it's going to come for everybody. And the advantage is going to be that instead of having banks settle up and waiting on a person in a back office to clear your money market trade where you just hold your savings, this is going to be instantaneous. You don't have to wait a day to take out your money, which is the current standard. I have, I don't know, $100,000 in a money market fund as my savings account. I want 20 grand of it. I tell my broker, he makes it available. I get it the next day.
Howie, does this move the investment banking industry into crypto? I mean, is this the official on-ramp finally?
Yeah, so this is the simplest, safest, easiest product to do this with. If they're starting here, then they'll make a crypto version of all sorts of trades. And eventually we might trade on the exchanges, on a blockchain. It would be a private blockchain. It wouldn't be something like Ethereum most likely. But that's important because, the NYSE, like we've talked about, has said they're going to file to start trading 23 hours a day. Well,
you're going to see here in about 5 years when we can't remember what it was like not to have these types of cryptocurrencies and investing. It's pretty good stuff. Thanks, Hal. Appreciate it.
Howie Font, market analyst here on the Big Biz Show. Freezing as little took us off in New York City where we bask in 65 degrees and sunshine. Sorry, not sorry, Howie. All right, keep it here. Much more to come on the Big Biz Show. Do not go anywhere. Mary... Live from the Loft 100 studios. We are in sunny Southern California, wherever you're watching, wherever you're listening. We appreciate you being along for the ride. That is the Day Trader Quartet up on stage back here at the bar. Costa, Marybird, Godwin, and Sully.
Good to see you today. 80 million homes across the country, 175 countries, nationwide, coast to coast. Great to have you along. And look who's here today. Bob Babbitt.
Our favorite.
Of the Challenge Athletes Foundation, Competitor Magazine, Muddy Buddy. I'm trying to go way back. What was the first one? Was it Competitor was the first one?
Running and Triathlon News.
Oh, that's right.
Right. Running News. Oh, yeah.
It was
go way back.
What's interesting is this extreme. I keep calling it. It's not extreme sports. It's not
endurance sports.
Endurance sports.
Yeah.
There have been heroes, pockets of heroes along the way, going back to about, what, 1984, 85? Was when,
well,
like, the Bud Light
earlier.
series?
Dave
Oh, really?
Scott, that 82, 83, Tinley.
When was the first Iron Man?
First Iron Man was 78.
78.
On Oahu. Yeah. And
When did you
went
do yours?
1980. It was 100.
If you compare the early days of the Tour de France, where they were drinking wine and cutting courses, and the early days of
Same
Iron
thing,
Man,
baby.
Iron Man, like, you thought you had to
thing.
bring a tent and a sleeping bag, didn't you?
The guy, well, yeah.
No, you did. That was the story.
I did. It was a 2.4-mile swim, 112-mile bike ride, 26.2-mile run, but we had no idea when over. There was only 15 people did it in 78
So this is just some
and
crazies.
79.
Just some crazies that we're going to try this thing.
12 finished
that
both
wasn't a red
years.
flag. There was only 15 people.
The best part is the guy who started it, John Collins, he put it on in 78 and lost $25. In 79, he made $25, so he retired even.
And now it's a multi-million-dollar organization.
Big time. Yeah.
Did you,
Awesome.
when you did that back then,
Yeah.
did you have like a bag of granola, a sleeping bag, a lantern, and a bicycle?
I actually had a bike from a police auction that cost $75 and went there not knowing. I had a pannier sleeping bag and tent because I thought you swam 2.4, rode 56, camped out, and rode back the next day and did the marathon. I didn't know that you did the whole thing in one day, so it was a little bit of a surprise.
So you started a journalistic journey when you realized this is going to catch on at some point.
You know what? Because the whole thing was, I had no idea I could finish the thing.
Yeah,
right. And my crew gave me a Big Mac fries and a Coke at mile 25, root beer snow cone at 90, then finished the bike, and I come rolling in. I hear this boom box, and I see a bamboo mat, and the crew's like, "How about a massage?" And I'm like, "That sounds great." So I got a 45-minute massage between the bike and the run, and I'm laying there thinking. Meanwhile, this guy's finishing the race, right? And I'm like,
this was a survival thing at the time. This wasn't.
No, we had no idea what we were doing. But when I finished this thing, I'm coming up Diamond Head. My crew's behind me in their little Fiat convertible.
Oh, you used to be on Oahu.
I was Oahu.
Oh, it wasn't.
I was the last year was on Oahu. Last year that in 1980 was last year on Oahu. Then because the thing had grown to 108 of us, they couldn't do support crews anymore. There was no permits. They had no permits to put this thing on. But when I come into Kapilani Park, and I'm thinking, there's going to be bands at the finish. This is going to be the coolest thing in my life. I come rolling in, there's a light bulb, and there's a chalk line, exactly. And I hear this guy in the dark over here going, "Hey, you." I'm like, "Yeah? You in the race? Yeah. You're done." There's nobody there. There's one guy doing one-arm push-ups in the park and me.
Now, you look at it today, and it's like the NFL. I mean, it's like a Super Bowl.
We're talking 140 Ironman branded events around the world, and we're talking it's a billion-dollar industry.
Well, so you went from that as your passion into a business and publishing, and along that way, you met a lot of pretty significant athletes.
Yes.
Which caused
Dave Scott, Mark Allen.
Right. By the way, one of my heroes is Greg Welch.
Yeah.
I play pickleball with a guy like 4 days a week now.
Exactly.
It's so funny. I mean, because these guys were so elevated. I mean, I play guitar with Tinley often, and I remember having a poster of Scott Tinley. And the poster was him walking out of a mold like he was like Superman. I remember those days.
Yes.
And
how big are you?
Well, just how big are you? Well, that's the thing. When we were doing those, I went up to Babbitt and said, "Babbitt," I said, "I'm not going to win anything here. But look, I'm like a taco shy at 250, and we're a bunch of us out there running. These guys are 160. How are we supposed to compete?" So we started Club Clydesdale. And that's how you got a Clydesdale division.
And the T-shirt said, "How big are you?" Right? Which was not the most appropriate thing to do at the time, but it worked out really, really well.
Babbitt, has an art department at Compare Magazine. He comes out with a logo that says, "Just how big are you?"
We did shirts. It was great.
So one of those athletes caused you to get together with a couple of your buddies and start Challenge Athletes Foundation.
Jim McLaren. Yeah.
And that has turned into, from buying a guy a van who couldn't walk, got hit twice.
Amputee, and then he became quadriplegic. Yeah.
To this day, how many grants do you guys give away for folks with challenges so they can participate in sport?
Well, we've raised $191 million, and we've sent out over 52,000 grants to get challenged athletes a piece of equipment, training, or travel to stay in a game of life through sport. And now we've done that in athletes in all 50 states, 73 countries, and more importantly, 105 different sports. Speaking of pickleball, wheelchair pickleball was our 105th sport.
My favorite sport still to this day is wheelchair rugby, which they call murder ball. And it's basically like going to the El Cajon Speedway and watching Demolition Derby. Because those things, they've got these chairs that look like they took some corrugated siding from in a bad part of the neighborhood. But I mean, it's really actually very athletic and very, very violent.
And the chairs weigh about 40, 50 pounds.
Yeah.
It looks like a Star Wars chair.
Yeah, it does.
Yeah, and all of a sudden you see these guys smashing at each other and going, hey guys, the ball's over there.
Who cares?
So you guys just got off one of your biggest fundraisers of the year doing $1 million challenge, and that's a bicycle ride from San Francisco to San Diego that I did 15 times, I think. At some point I was sponsoring the deal, so I didn't have to ride. So you start.
The more you pay, the less you have to ride.
It was great. After a while, I was just going to lunch. Just
Exactly.
got
Throw money at.
How'd it go this year?
$1.8 million.
Wow.
We're talking 125 cyclists. Now you realize those guys climbed 30,000 feet.
Yeah. So
we used
to. Yeah.
8 days.
Yeah. We climbed the equivalent of a Mount Everest.
Absolutely.
Over the course, 29,600.
Yeah.
So these guys climbed 30,000 feet because as beautiful as Big Sur is. I don't know how it works. When you look at the map, it's going this way. But if you're near Big Sur, you're going this way.
I heard it was a little harder of a course this year.
It was a tougher course. Parts of it were closed, so they had to go ride inland. Yeah, it was a tough course, but 8 days and 23. It's hard to whine, and Sully knows better than it. You're going, this is really hard, and some guy in a hand cycle goes rolling by you, or a guy's an amputee, or somebody who's visually impaired on the back of a tandem, and they're going, hey, Sully, why don't you pick up the pace a little bit?
I got a picture of Creighton Wong and James Osborne, two athletes, and I was helping these guys. When you're riding a bike, you just put a little bit of pressure on the lower back. I don't care who you are, it takes off 50% of this. So these guys are watching me do this to other people. Well, I got a picture of James Osborne doing this at Creighton Wong. That's my picture I call 2 legs, 4 fingers, and 2 guys.
Right.
And honest to goodness, you had 2 guys, 2 amputees helping themselves. It's really inspiring stuff.
It's inspiring.
But it's also a tragedy that not that we have to do this, that we get to this, but insurance has still not got on the bandwagon to realize that child obesity rates in challenged children are 40% higher.
Yep.
Participation rates are low, and if you lose a limb or lose the ability to walk or even sight, insurance company's going to pay you for a walking leg and maybe a wheelchair.
Yeah, all they do is they'll cover a everyday chair or an everyday walking leg.
And those legs are 15 grand a piece if you want to run. I mean, that's crazy stuff.
Nothing to do with fitness is covered by insurance, which is the silliest. They'll get you all the opioids you want.
Well, the thing is, especially when the actuarial tables are what marks their interest or their fees.
What you think about it as a family. You got a family unit. Dad's paralyzed, right? Family's going for a bike ride. Without a hand cycle, Dad's sitting there at home while the family goes for a ride. With a hand cycle, the family unit's together.
One of the best. One of the best.
I appreciate you.
Thank you, guys. Thanks for all your support.
Oh, come on. We need to figure out something.
Donutville is my YouTube.
Is that right?
Yeah.
I like that.
We got a new triathlon that Bob's going to help Mike sponsor. It's billiards, bowling, and golf.
Cheetoville.
All right, keep it here. Much more to come with the Big Biz Show right after this. Big Biz Show rolls on. Always appreciate you guys being along for the ride wherever you are on this mud ball we call Earth. We're inside the Loft 100 studios here in Southern California. That is the Day Trader Quartet. DTQ. Back here at the bar, it's Costa, it's Mayor Godwin, and Sully.
Good stuff. All right. Going into the holiday season, we are, of course, keeping an eye on some of our favorite companies as well as this repositioning that's happening with portfolios at the end of every year. But things seem to be moving in the right direction. We're getting a new Fed chair, which should change things a little bit. Mm-hmm. Although I did not have a problem with Jerome Powell. I'm still waiting for, he was an academic, which was good. And remember, the Fed Reserve is not a federal organization. It's just overseen by Congress. It's like the commissioner of baseball. It's a lifetime appointment, and they can't be removed. And the reason they do that is because there can't be any sway from the executive branch of the government in terms of monetary policy. And there's only 3 things that the Fed does. Number 1, keeps prices stable. Number 2, keeps interest rates at a certain rate. And number 3, has a maximum employment. That's what they're striving to do. And economics is so elastic that it's a tough job. However, this last group dropped the ball so badly with respect to COVID.
Yeah.
All they needed to do was go back 100 years of this economy. But go back 80 years of this economy. And every time we pump money into the system, in other words, every time we give Americans cash that we print, okay, just out of nowhere, every single time, going back to 1930, inflation goes up because you have too many dollars chasing too few goods and services. There's a reason that prices are where they are. There's a reason people make what they make. You can't just give it, like, if Jeff Bezos, who could easily do it and only lose 1% of his wealth, give everybody $1 million. He'd give every single American $1 million.
Gotta be great.
And I think it's about 2.5% less wealthy by doing it. But it wouldn't be great because your spending power within 18 months would be only 20% higher than had you not had the $1 million. And you'd be in more debt and so on and so forth. So it's almost like, what's good for you is good for you. Either way, that's why we talk to these CEOs of public companies. That's because we want to be able to look at some real people that we can invest in, like Mike Logozzo.
He is the Chief Executive Officer of reAlpha Tech Corporation, their ticker symbol AIRE, and he joins us back here on the Big Biz Show. Mike, great to have you back. Happy holidays. Hope all is well.
Hey, great to be back. Happy holidays to you also.
Hey, I want to talk about this next gen real estate technology. I mean, it seems, we've got our buddy Nick Liuzza coming on the air with us in just a minute, who's got the next gen AI mortgage sort of company, and he was originally focusing on Gen X, Gen Z, but now realizes that because of the technology, he can conquer the whole market. You guys are kind of the same thing there. The real estate's taken a pivot here. And like, why have an appraiser come out when we can have AI do it? Why have an old school sort of model when all these technologies are available to us? So talk about what you guys are doing over there, Mike.
Yeah, absolutely, Sully. What we've done is we built a vertically integrated home buying platform. So we view this as kind of category defining. When you think about the traditional way where somebody wants to go search for a home, they hire a realtor, they go through mortgage, then eventually they go through title. We essentially have built the entire platform. We own all of those, and we have kind of AI as the engine behind it to make us both more efficient as well as more frictionless for the customer.
I think for the old school guys, when we used to have to put down 10%, had to wait for an appraisal, had to go back and forth. The process was 30, 60, 90 days. You guys are cutting that process down to weeks in some cases. Talk about that piece of it as far as the efficiency goes.
Well, because we own the entire process and we have one unified CRM where a customer can come in and go all the way through, and we know where they are in every step of the process, whether they're in mortgage, whether they're in realty, or whether they're in title. That allows us to operate more efficiently. In addition, we are a tech company that's operating in real estate, and we've built tools for our folks to use as well. So, like, for example, our loan officers have an AI assistant that sits on their desktop and helps them process a lot of that paperwork that's kind of mundane and takes a lot of time. So, when you combine, unified CRM, tools on the back end, and kind of more of a frictionless experience on the front end, kind of nets to a faster way to get to close.
Mike, are Century 21 Realty colored helicopters circling outside your building? I mean, are traditional realty companies,
the Remax black SUVs?
Do they like what you're doing, or are they affected by it at all?
Honestly, guys, I think we're a little too small to be on the radar right now. I mean, we're a microcap company where we're just getting started. However, we are operating now in 34 states. So, we're certainly getting there. We're really looking forward to home buying season coming up, early next year. But, we've started growing through acquisitions. We recently acquired a realty company, digital realty brokerage called Preview, that got us into additional 12 states plus DC. And prior to that, we acquired a mortgage brokerage, which got us into 30 states. And, as a result of these acquisitions, we're going through, post M&A integrations right now. We're building out our tech. We're kind of getting ready for prime time here, coming up in the next few months. But I mean, our goal is to be known, to these folks who've been around, kind of the old school folks.
Sure. Mike Logozzo, Chief Executive Officer, reAlpha Tech Corporation. Their ticker symbol is AIRE.
Hey, Mike, are you finding that the younger generations, Gen Z, millennials, are more apt to adopt this online platform than maybe an older folk person like myself might be a little skeptical of it? Or is it across the board?
I mean, is your client stack younger, you think, or is it about the even?
We, surprisingly, we thought that we were going to be more appealing to the millennials. And what we found is that people who have bought their second home, going on their third home, are finding that this is in a more appealing way because they've gone through it before, and they're like, hey, I really don't need a realtor to hold my hand through the entire process.
That makes sense.
What we didn't talk about earlier is that because we've created these efficiencies, we're offering rebates back to people who use our platforms.
Right.
And, so the people said, hey, look, why do I have to get my hand held through the entire process? I've done this once already, twice already. I'd rather get the rebate and go through reAlpha.
Well, the interesting part, I think that's what Mike was referring to, is that your technology, your proprietary advantage could literally change the industry. And regardless if you're small now, if you think in terms of how you could overlay your technology on some of the bigger companies, I think you're going to be a threat at some point, which I think is a good thing. Talk about that rebate program for a minute, because I think that's going to perk some eyes. We're going to get some email about that.
Sure. So because we own Realty, Mortgage, and Title, and we will be representing the home buyer, we have access to the buy-side commission, on the sale of the home. And because we have the ability to essentially take a customer acquisition cost. If you think about right in the traditional way, realtors have customer acquisition costs, mortgage companies have customer acquisition costs, so do title companies. When you create a vertically integrated platform and you have one customer that kind of drops all the way through, we've taken that CAC and we've divided it up. And because we've done that, now we've created these efficiencies, we're willing to give rebates back, to the home buyer by using our platforms, because essentially we're opening up 3 different streams of revenue. So it's well worth it to us. It's a win-win for everybody. We're generating 3 streams of revenue. They're getting their rebate back. And we're giving them the option as to how they want to use the rebate. So some people use it as a down payment. Some people, given the interest rates today, people are wanting to buy down their interest rate. They could do that because we own the mortgage component.
Mike, you're coming back. I got to tell you, we got to have you back on a regular basis, brother.
Big time. Mike Logozzo, CEO, reAlpha Tech Corporation. How cool is he? Wine stores right there in his conference room. Their ticker symbol AIRE. All right, keep it here. Much more to come. Don't go anywhere. Big Biz Show continues.
Hello and welcome to Business Focus right here in Carlsbad, California, Loft 100 Studios. I'm Mary Burke Godwin, and I am joined by CEO, co-founder of Beeline Holdings, Inc., Nick Liuzza.
You got it.
Am I saying that right?
You're saying it right.
Yes, awesome. Well, I'm very happy to have you in person. We always see you on Zoom. And this company is so fascinating and very timely. I feel like it's hitting all the marks of needs that are out there for people, especially I have teenage daughters that want to potentially buy homes someday. And I feel like Beeline Holdings is the answer to all of this. So I'm going to have you kind of give a top-down look at what Beeline does, and then we'll get into the weeds a little bit.
We've been thinking about Beeline for a good 22 years. Previously, we were in other sectors of the real estate industry, but we saw how difficult it was for younger Americans to buy homes. And that's still the case, right? The youngest home buyer 4 or 5 years ago was 33 years old. First-time home buyer was 33 years. Now it's 40, right? And so that gap.
Nationwide? That's
nationwide.
Wow.
Yeah, and so it's very difficult for these younger Americans to buy homes, and we're solving that problem.
And there's probably many, many reasons. Number one, things are too expensive.
Correct.
Frankly, no matter where you live in the country, it's just expensive to live. Home prices are going up, right? And the rates are going up.
Yeah. And you have to compound that by the fact that, everything else is expensive. And if you want to buy your first home, you have to come up with a 20% down payment for the most part, right? So where are you going to find that money from in order to buy that home? And so we're trying to solve that problem as well by allowing first-time home buyers an easier path to buy that first home, meaning how do I get the down payment? Beeline can help me do that. And then also a lower monthly payment so that I can afford to live my life and make my mortgage payment at the same time. So, it's the American dream, right? The American dream has diminished.
So let's talk about ways in which you can help. I know that you have several different parts of what you do. And there's, the SaaS platform. And this non-qualified mortgages. You're really helping people that can't qualify, whether it's they don't have W-2 because they work freelance, which is a big thing in the last 5 years. Right? Is that what you're seeing?
Well, definitely. Like the premise for buying a mortgage and looking at the Freddie Fannie standards or the conventional standards, right? It always has been, W-2 income for the most part. If not, then, we have to look at K-1 income or other 1099 income, but it's harder to qualify if you're a younger borrower. And so the Freddie Fannie conventional mortgage box is hard to fit in for the gig economy or the younger borrower today. right? And so people that are coming out of college now, they don't necessarily have W-2 income. They may be influencers or they may be consultants, right? And their income happens to be more lumpy than when we created these programs so long ago. So enter Beeline, who is now nationalizing non-qualified mortgages and making non-qualified mortgages easier to qualify for on a platform that will offer both under one roof. So if you can't qualify for a conventional mortgage, it's not game over.
So talk to me about the ease and the how easy you're making it for people.
Yeah. You know, we're catering to the people that had these phones in their pockets when they were 6, 7, 8, 9, 10 years old, right?
This is what they know.
So the way they engage, the way they process, the way they shop is completely different than what you and I did back in the day, right? They want real-time certainty. They want real-time data. They want real-time information that makes sense, that they can rely on.
Yes.
And the mortgage industry for the past, 20 years has been anything but that. So you can come to our platform. In 7 minutes, we can give you 90% certainty as to whether or not you can qualify for a mortgage.
Wow. So,
Just
you're
7 minutes.
saying, because they want to know, where's the link I click, right?
Yeah.
So you go to your website and you're filling out a form.
We're collecting your income. We're collecting your bank statements. We're making decisions and calculating your bank statements calculating your income based on your bank statements. We're looking at your assets. And we're looking at all this in about 6 or 7 minutes and really making a decision. In the first 3 or 4 minutes, we'll know if you're going to qualify a conventional mortgage or not. And if you're not, then we're going to pose a different set of questions for you that will steer you down a different path.
I love it.
Allowing you to qualify for a different mortgage, like a bank statement loan, which doesn't even ask you for your income. So if your income is really low, we're going to know, you know what, conventional is not going to work.
Right.
But we look at the same time, we're looking at your bank statements and we say, wait a second, we see good ebbs and flows here. This person is not going to qualify for conventional, but we have a bank statement loan. And by looking at your bank statements, you're going to probably qualify. Bam, we'll issue what we call a ready approval. The industry term is pre-approval. A ready approval is a validated document where we validate your income, your assets, or your cash flows, right? And give you a document saying, we're 90% sure we can get you a mortgage in 7 minutes.
Wow, that's incredible. Now, so I know you utilize AI and blockchain.
We do.
So is AI part of what you're talking about there? Probably.
Everything I just mentioned is leveraging AI.
Yes.
Absolutely.
And then how does blockchain come into the picture?
So, the blockchain basically, you're hearing terms now, tokenization versus securitization, right? And leveraging the blockchain, i.e. the public record, to the crypto world, right? And so what we're doing is we're leveraging a relationship with a partner that's going to mine tokens or is mining tokens to fund transactions for Beeline. So at a high level, what we're doing is we have a new product called Beeline Equity, right? Which will allow a homeowner to sell a fraction of their home in order to create liquidity for themselves in a situation where they don't want a monthly payment, they can't afford a monthly payment, they can't qualify for a cash out refi or a HELOC, right? Or they just don't have the credentials at the end of the day that a bank is looking for. And so enter Beeline Equity, which is not a loan, it's a sale of equity, and it gives you the ability to monetize or create liquidity on your home without entering into a loan. So you sell a portion of your equity to Beeline, and we hold on to that until you sell your property, and then you pay us back.
And you don't have any rights on that.
No.
Yeah.
So there's no rights, right? The rights, and first of all, we're buying a minority stake, right? Anywhere from 10% to 49%. Most people are in the 20% range, right? And so you get the cash. You can use the cash for whatever you want. But we have no rights to the property, right? We have zero rights.
You can't come in and say, you need to paint it this color.
No.
Knock down this wall.
No, and we're making that decision quickly in like 3 minutes, and we're giving you your cash in like 7 days. And then at the end of the day, you don't pay us back until you sell that house or you do a cash out refi, whenever that is. Wow. And along the way, unlike a mortgage, there's no principal and interest or payments that are due to Beeline.
Tell me what you're looking forward to in the horizon here. We've got a new year coming up here. So talk to me about whatever you can talk to.
Yeah, look, we're a public company, so that's a good question. People are always skillfully trying to ask and pry information out of us, so I appreciate the way you ask that question. But at the end of the day, what I'm really excited about is there's 75 million millennials and there's 71 million Gen Z behind them. Almost half the population is under the age of 40. right? And so what I'm really excited about is seeing the changing of the guard in terms of home ownership as it relates to this new generation. Or two generations, right?
Yes.
Because they're going to impact the housing market like the baby boomers did back in the day, because it's such a big class of people, right? And they haven't had a fair shake yet. And so we're trying to give them a fair shake and bring the American dream back to them. And I'm most excited to see how they respond to the products that we offer.
Well, I know we have to wrap up, but I feel like, we meaning the older generations, are trying to get them to fit
Hey,
into
watch it
the
now.
way we did
Watch
it.
it.
Come on, you're with me. You're with me.
Probably older, yes.
But they don't need to fit into what we did.
Yeah.
I love that you're, coming with them, meeting them where they're at, and they are going to redefine what it looks like to buy a home.
They're better. Our kids are better than we are.
They
really are. They're better. They're smarter.
Every day.
Yeah, they're better. They're smarter. They pay attention more.
Yes.
They get in less trouble than we did, and so they're better kids.
Yeah.
And they deserve a
agree.
break. Yeah.
Well, thank you so much for spending time with me, Nick Liuzza. He is the CEO of Beeline Holdings Inc. We are here from Loft 100 Studios. I'm Mary Burke Godwin, and this has been Business Focus. Thanks for watching.
Loft 100 Studios, the Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer@solientgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
It is the holiday season here inside the Loft 100 Studios. Hope you out there are enjoying it. Thanks for being along for the ride. Another edition of the Big Biz Show. Day Trader Quartet, TTQ. Back here at the bar, it's Costa, it's Mary Burke Godwin, it's Sully. Hey, hey. Good to have you. One of the smartest guys I've ever met in the world of finance is a guy by the name of Mike Flum. He runs a company called creditriskmonitor.com. CRMZ is their ticker symbol. And what it really is, these guys actually have enables users to monitor an entire supply chain for a company and use best practices for credit, analytics, and so on and so forth. It's really so timely post-COVID. And once again, he joins us in the Big Biz Show. Hey, what's up, Mike? Good to see you, man.
Hey, Sully, thanks for having me back, and you're too kind.
No, truly, I mean, because if you think in terms of what was the biggest thing, it's so interesting because I remember when I was in college, I was not deployed politically at all. Didn't understand economics. Then, of course, during the Great Recession, all of our kids figured out that they should be probably more politically active. And then post-COVID, we all learned about economics, didn't we? And supply chain economics. I mean, we really did. It's been, the good and the bad here is that now we understand, as we talked about before, when too many dollars takes too few goods and services, and there's a backlog. And I think that's your timing was perfect. Talk about what you guys do there, because I think it's so timely because there's so many companies had to change the way they're doing business because they didn't know what they didn't know during COVID. And boy, nobody wants to get caught like that again.
What I would say about us from Credit Risk Monitor's perspective is we serve kind of two different clientele predominantly. One is within the corporate credit space in terms of underwriting the extension of accounts receivable towards customers. So you're now acting as the supplier saying, hey, I'm going to sell you goods and services, customer. I'm willing to extend you, net 30 terms. And by the way, if you pay within the first 10 days, I'll give you a 2% discount, i.e. 210 net 30 would be a typical If you're dealing with somebody like a Walmart or a Macy's, as they just announced, they're stretching suppliers basically from 90 days out to 120 days on this. So that has big implications in terms of cash conversion cycles, where you find your working capital, how you can finance that as a business. If you have to go and tap a revolver, you have to tap private credit, it's typically much more expensive than finding ways to float that under your suppliers. So that's one aspect of the business. And
real quickly, what it looks like to your client is, it looks like to your client that they've got an overlay here that can give them a more efficient way and save them money from the very beginning. So they're trimming their sales all along. It's not just about buying right and selling right. It's about managing that through the process, correct?
Yeah, I mean, where we really help people is actually in the real-time monitoring outside of just the origination, because, as we've all experienced, especially to your reference on COVID, right, things change at the drop of a hat. So you have to have real-time alerting along changes in the financial risk profile of your customer or your supplier, and that's dynamic. So if you're thinking that, hey, I can do this one check per year, or, I checked the supplier when I onboarded them and now I don't care about financial risk. What I really care about is, cybersecurity and operational excellence and logistics. Those are great. I'm not saying you shouldn't focus on that. But at the same time, if you're not monitoring financial risk, you're oftentimes missing kind of the canary in the coal mine that can lead to downstream issues related to underinvestment in cyber preparedness. It increases the chances of breach or incidents. The same with quality fade or logistical upset. Basically, if it's not bolted to the ground and you get into financial distress as a supplier, you're generally going to start cutting most of the things that you can. And that includes, quality assurance in terms of R&D, maintenance CapEx, expansionary CapEx, a lot of those things that are really important for long-term continuity of supply. And to your earlier point, I think COVID was a really interesting kind of learning case for us, because it was the reversal of, going on 70 years of globalization doctrine that goes all the way back to Bretton Woods, right? So this is a whole scale reversal in like the way that the United States and the general global order has been functional.
Well, real quickly though, I want to bring you back to the mortgage crisis and quality fade. I mean, it was the geek in the frickin' board shorts and the glasses listening to rock and roll music that said, "What's inside of these bonds? What mortgages are inside?" And they realized these guys are 180 days late. The quality fade went from AAA paper down to C paper. He says, "Well, look, if we bet against this market here, we're going to make a lot of money shorting this." At the same time, you could prevent that from even happening, is what you're talking about with what you're doing. I mean, the lessons learned from the Great Recession, the lessons learned from COVID, you're kind of an enterprise-wide solution for that, guys.
Yeah, I mean, I'm glad you put it that way, because I actually view, basically what occurred during the Great Recession was much more within the, kind of the RMBS market, if you will, versus now what we're seeing is actually the extension of that into the commercial markets with private credit. Right. I mean, you look at the blow-ups that just happened in the automotive space with Tricolor and First Brands. I mean, those are private companies that were basically, gorging on private credit because it's available and it's cheap. And that's unfortunately, that's what happens when you have intervention from a monetary perspective like ZIRP, where you end up in a scenario where anyone who has the opportunity to chase yield is going to chase yield.
Well, right? Hence you had, again, to use that same analogy, you had mortgage brokers chasing yield by giving anybody they could a loan, and they could sell the paper regardless how crappy the paper was. Had they had credit risk monitor going there and say, you would never buy this thing in the first place. Hey, buddy,
You're 100% right.
No, it's true.
What was IO, what was IO, or, basically collateralized bonds, collateralized mortgage, CMLs, all that, RMBS. Now you just have it in, collateralized loan obligations. Basically it's the same stuff that's now going into insurance companies or pension funds. Right? He's the only
company that learned something out of COVID and the Great Recession. You guys need to go check the company out.
Michael Flum, the CEO and president, CreditRiskMonitor.com Incorporated, the pride of the Rice Owls, their ticker symbol, CRMZ. You'll see him again here on the Soon real quick. Keep it right here. Much more to come with the show after this.